What are required minimum distributions and how are they determined? Beginning at age 73, you must begin to withdraw money from your retirement accounts every year. The amount is determined based on your life expectancy. As contained in the IRS tables, required minimum distributions are computed by dividing the account balance at year's end by the life expectancy factor. Assuming a husband and wife are about the same age, then this factor at age 73 is 26.5 years. Alternatively, you can multiply your account balance by 3.77%, which is 100 divided by 26.5. As a result, individuals now can choose to delay taking their first RMD until April 1st of the year following the year in which they reach age 73. From that point on, RMDs must be received each year by December 31st. On January 1st, 2033, the threshold age for RMDs will rise to 75. Every year, your required minimum distribution will increase over your lifetime. If you want an estimate of your required minimum distributions each year, let us do the math for you and help you develop a winning strategy.